So this is why I am firmly standing on this ideology that if we are not at a bottom now, we are very close to one. Yes. Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, we're going to get into some ongoing fundamentals, discussing and talking about the current state of the crypto ecosystem from an institutional perspective. We're going to be tapping in and listening to two industry-leading experts from Signum Bank discuss and talk about the ongoing happenings in the digital asset ecosystem, how there is nothing fundamentally or structurally wrong with the crypto ecosystem. We are just currently experiencing a risk-off backdrop, and they have a very bright perspective I want you guys to hear for the future of the digital asset space. We're going to also take a look at some ongoing fundamental developments in regards to Hedera. I know we haven't talked about HBAR in quite some time on the CYPRX platform, Canton, XRP, and we're going to take a look at XRP and Canton's price levels and some things to watch. And then I also want to show you guys some interesting fractals that are aligning with the total cryptocurrency market cap that reflect price action from back in 2021 to 2022, almost to the exact T of a degree. If you guys enjoy these video breakdowns, do us a favor, smash that thumbs up button and subscribe. Always bringing you guys insightful information when it matters most. Starting off here with this Hedera post. They said in brief, Hedera is the trust layer of the digital economy. Now, they are not the only ones that support this ideology. If we come over here on Table Talk, posted on Hedera's YouTube page, we had Mance Harmon sit in with this gentleman here, a new Hedera council member from FedEx, Dale C, I think his name's Christie. I'm not going to butcher his last name, but I just want you guys to take a second and listen to what he says. Does he sound bearish to you? Does he sound skeptical about the ongoing volatility in the market? He's giving a futuristic outlook and tells you guys that right now, this is a once in a moment opportunity for our civilization. Take a second here and listen.
To follow up on that, what made FedEx interested in getting involved with the Hedera Council?
We realized that we could build the technology, but it was beyond just a technology discussion. And, we learned that digital supply chains don't just scale by adding more technology. They scale when trust scales. And so I don't want to go past what I think is an obvious statement, but the future of global supply chains is digital. And so let me just hit a hard line in the sand on my response on that one, which is we now have 3,000 years or so of trade, right? Starting with a canoe across a river, but you had a proxy of trust that owned the canoe that was separated from supply and demand, from you and me. We had a middle person there. Well, that's only grown over hundreds and thousands of years to the point where now it may take a couple of dozen documents, hard paper documents, to get something around the world. And we've reached the point where global supply chains, the speed and the complexity of that have simply moved past the ability for paper to keep up with that. And so that, combined with where the technology is right now, allows us to say the future of global supply chains is digital. Once we digitize, now we can move things at essentially light speed, the speed of data, compared to what we've had for all of civilization. Again, this is kind of a once in a civilization moment where the rearview mirror is paper and papyrus and clay tablets and what got us here. And the windshield is essentially digits, right? Digital, ones and zeros, and the ability to capture that and to move it through these very complex systems, machine learning and AI and everything else that can do that, analytics and optimization. That's what's right in front of us. So the timing of this is not coincidental. We really think we're at this inflection point from that point of view. And so back to the reference I made, which is, digital supply chains scale when trust can scale. So this is really about trust. Most shipment data should stay within company systems, but there's a handful of, a small number of key facts that are going to have to be shared and trusted across many parties. And we think Hedera offers a neutral way to support that shared trust. And we wanted to help shape how that infrastructure evolves.
And we wanted to help shape how that infrastructure evolves. That's coming directly from an individual representative at FedEx. I'm sure you all know who and what FedEx is. That is massive confirmation, in my personal opinion, not to be too worried about the current ongoings in the crypto ecosystem. Now, to further my case here, listening to some industry-leading experts and diving into some bank documents before we head over to the accurate technical analysis, giving you guys some levels to pay attention to on both XRP and Canton, I want to go back to my March 1st post where I posted some screenshots from this DBS bank report from Q1 2026. And it says here, this is not crypto infrastructure failing. This is one of the largest risk-off environments that the market has seen since 2020 to 2022. Institutions themselves have confirmed a broader risk-off backdrop has triggered fund outflows from risky assets into traditional safe havens. From October 2025 to today, crypto has shed $2.2 trillion. The only larger pullback in history was 2021 to 2022, where the market lost $2.3 trillion. And those who bought the fear in 2022 witnessed the next expansion phase. What makes this cycle different is we've never had full institutional custody, regulation, and infrastructure in place before a recovery. This is not the end of crypto. This is compression before expansion. The next recovery will be built on the strongest foundation crypto has ever had. So this is a February 26th, 2026 report from DBS themselves, where in the documents, they go on to talk about the broad risk-off backdrop and what is weighing on the current market sentiment. They talk about geopolitical risks, including escalating US-Iran tensions, Russia-Ukraine, tariff uncertainty, and the ongoing debacle behind tariff Supreme Court rulings. They also talk about Greenland. They also mention tighter monetary policy conditions, right? So in the bank documents, none of this points to any structural, problem with the cryptocurrency ecosystem itself. And instead, we are just seeing a risk-off backdrop. Now, to further support this case, let's head over to the Signum Bank LinkedIn page, where just 4 hours ago, they posted this. CoinDesk Will Kenny spoke with Fabian Dori, Signum Chief Investment Officer, about Bitcoin's recent pullback and why the long-term bull case remains intact despite the short-term liquidity squeeze. And I want to go over to CoinDesk. I usually don't read mainstream articles, but this was actually a pretty decent article that goes into detail as to what's happening to kind of calm and ease the nerves before we roll over and take a look at the total cryptocurrency market cap. So you can see from a bank's perspective, they are calm, cool, and collective and understand that this is just a risk-off environment and they have a long-term bullish outlook. It says here, volatility is likely to remain elevated. And this is coming directly from this gentleman, what's his name? Fabian Dori from Signum Bank. All right. Volatility is likely to remain elevated in the near term, and prices could fall further. We'll go over that here in just a second. As the crypto markets grapple with liquidity squeezes and deeply fractured sentiment, according to Signum Bank Chief Investment Officer. But the long-term picture here, he argues, remains intact. We can see volatility remaining high in the short term, and prices could even go lower from here, Dori told CoinDesk in an interview. Sentiment has collapsed. Trust and confidence for investors to build exposure are very limited at this moment in time. The recent divergence between gold, which has held firm, and the innovation and assets such as Nasdaq, tech stocks, and Bitcoin underscores how fragile the current environment has become. Yet, Dori cautions against searching for a single explanation. There isn't one single cause, indicator, or driver behind this gap, he said. It's a number of elements that have been building up over the recent months. The crypto markets have trended lower in recent months, with Bitcoin and other major tokens retreating from earlier highs as macro headwinds, uneven institutional flows, weight on sentiment, sticky inflation, and shifting expectations for Federal Reserve rate cuts have curbed risk appetite, while periodic geopolitical flare-ups have reinforced a broader move out of speculative assets. So that just goes hand in hand with the post that I made 2 days in advance from the DBS report that I read, shared inside the private CYPRX Discord, because they say the same exact thing. This is not an infrastructure problem. This is a risk-off backdrop. In Dori's view, the current weakness reflects a short-term liquidity squeeze rather than a shift in long-term fundamentals. Market data, he said, shows empirical signs of improvement beneath the surface. The U.S. business cycle is broadening, ISM services activity has expanded in recent months, and manufacturing prints have surprised to the upside. Historically, these are prerequisites for improving risk appetite. At the same time, headline inflation remains above the Federal Reserve's 2% target, but is nowhere near levels that previously fueled acute concerns around trade policy or tariffs. The trend, Dori said, appears subdued enough to allow the Fed to continue to cut rates later on in the coming months. That would improve liquidity conditions again, he said. Treasury-driven liquidity pressures could also ease, setting the stage for a faster than expected turn ahead of the next Federal Reserve Open Market Committee meeting. From a crypto-native perspective, the fundamental backdrop remains constructive. Stablecoin growth continues, integration into traditional finance is expanding, and the number of native tokens locked on networks such as Ethereum and Solana remains robust. Institutional adoption, while uneven, is still progressing. I wanted you guys to hear that right there. Once sentiment normalizes and liquidity conditions improve, the gap between traditional assets and crypto should narrow again, Dory said. This is coming again directly from a gentleman from Signum. Now, that's not the only thing Signum Bank recently posted that is net bullish for the entire crypto ecosystem on their LinkedIn profile. 2 hours ago, they posted this update from the Crypto Valley Association conference that's taking place at the Banking Symposium. Here it says, the train has left the station. For banks entering digital assets, the question is no longer why, but why not and by when. There is a clear flight towards regulated banking grade providers with MiCA now in force following Switzerland's DLT law. Regulatory clarity is accelerating adoption. So again, it's not a regulation issue. It's just a risk-off backdrop. Regulation is progressing in order for these financial institutions to come in. It says here, for European banks, the real question isn't buy versus build. It's time to market versus time lost. Being at the starting line matters more than building the actual track. That is huge confirmation again from a bank in this space that has a bullish emphasis behind it. I thought that you guys would enjoy that one as well. Also, there was a recent post on the Stellar Development Foundation just about 20 hours ago. This is a comment directly from the VP head of crypto at Visa, and he says, YRX's use of USDC and EuroC on Stellar highlights how on-chain settlement can bring more speed, transparency, and programmability to digital payments. What makes this compelling is that it doesn't come at the expense of traditional finance. YRX maintains full integration with Visa, bridging the gap between crypto and conventional payment infrastructure. So this just goes to show that, again, the infrastructure, the foundation is being built out. We're seeing integration with traditional financial systems and blockchain native organizations all in real time. Meanwhile, this is what the market looks like. Now, real fast before we go over some quick levels to pay attention to on XRP and Canton, as I've been giving you guys the most accurate updates on the face of the internet from any retail analytical individual on the internet. We will continue to do that for you guys here at CYPRX, but I want to point something very interesting out, considering I mentioned the large drawdown that we are currently living through. Taking a look at some fractals, we are on the weekly time frame on the total cryptocurrency market cap. You can see that from the high of November 2021 down to the low in 2022, the market shed about $2.3 trillion. Same thing as of time of recording, from the high in October 2025 down into the most recent low at 2.05 trillion, the market has shed about $2.2 trillion. So in my personal opinion, we are close, if not already at a bottom in the total cryptocurrency market. Now, I personally do think that we're going to see one last shakeout, and I have one area of interest on my charts that I want to identify to you guys ahead of time in case it does unfold. And that is our institutional dark pool sitting and resting at about $1.84 to $1.171 trillion, which also aligns with the August 2024 low. I would not be surprised if we did see a liquidation event underneath of long positions before we see a full-blown recovery in the total cryptocurrency market cap under this low at some point in time in the future. But nonetheless, what I wanted to show you guys is the fractal that price action created from 2021 to the recovery that started to form at the end of 2022, rolling into 2023. So you can see here, I have drawn, utilizing the drawing tool, the price action, highs, lows, highs, lows, highs, and lows, and this consolidation phase that took place rolling into 2023 at the end of 2022. If I take this and I just copy and clone it and bring it over to the current fractal that we are currently witnessing in the total cryptocurrency market cap, you can see it is identical to the current price action. I didn't change anything. I didn't move anything around. You can see from the high down to the low. Here we see a high down to the low and a nice bullish rally to take out early sellers. Same thing. Price retraced back to the downside. Price retraced back to the downside, had a nice bullish fake out, and then a nice dump down into the consolidation. And the same exact fractal is playing out now. So this is why I am firmly standing on this ideology that if we are not at a bottom now, we are very close to one. Yes, just like the Signum Bank representative mentioned, there is a possibility of further downside momentum in the digital asset ecosystem. But I do not believe that the total cryptocurrency market cap is going to shed another freaking $1 to $1.5 trillion, taking us all the way back down to 1 trillion, possibly even $800 billion, all the way back down to the November 2022 lows. With that being said, I firmly believe that what we are currently about to be living through is a consolidation phase, just like ending 2022, rolling into 2023 before we had this massive breakout and expansion. This is what I firmly believe we are entering in at. From roughly around $1.5 trillion to where we're currently trading at now is the range that I personally believe we are going to be trading at for some time until the market sentiment fully recovers. So yes, we could still experience some downside momentum, but I wanted to show you guys that fractal firsthand, that this price action that we're currently mirroring is identical to what took place in 2022, which is why I said in that post, anybody that bought the fear, uncertainty, and doubt in 2022 when the market was trading at $800 billion experienced significant gains when the market recovered. And we have to understand that this next bullish cycle that we experience as retail traders in this crypto ecosystem will be the first time that we have full regulatory clarity, full institutional participation, custody, like everything in terms of infrastructure that we've wanted over the last 17 years in crypto is finally here. So I've been an advocate of saying that when we supersede $5 trillion, $6 trillion, $7 trillion, which this next leg up I firmly believe is possible, we are never going to see an opportunity to get into the crypto ecosystem below $2.3 to $2.5 trillion ever again. With that out of the way, now coming over here to some quick updates on XRP's price action and Canton. Just some quick updates in regards to the institutional levels that we constantly give you guys out ahead of time in advance before the moves play out. These are the levels that I'm currently paying attention to. You can see my last post here on Twitter. I love this little tiny annotation tool where you can go into TradingView and you can actually post, comments from your favorite influencers and where they were talking about price. I mentioned to you guys that XRP had traded down into our institutional dark pool at $1.27, and you can see that price has since that post recovered slightly from bouncing off of that dark pool. However, since then, we have seen sellers show their hand and defend against the buyers that are making an attempt to push price higher. With that being said, bullish case. As long as we can remain above the institutional buy wall at $1.27, there is a scenario where we could see sellers gain the upper hand temporarily, push price back down into these $1.27 lows before we see buyers step back in, trap the sellers, become aggressive, and start to move price higher. That is bullish scenario number one. Bullish scenario number two is that we see buyers hold the $1.34 institutional dark pool where we're currently trading at. We see consolidation here for some time before we see buyers become aggressive and push price up into the $1.43 range. Now, we do have an institutional sell wall where we can clearly see passive sellers are sitting here and have since defended the $1.43 threshold. Notice how the 50 EMA also currently resides at roughly around $1.43. So if we want to see any higher prices on XRP, we need to see buyers hold support at $1.27 to $1.34, and we need to see a sustainable break and bullish move above $1.34, turning $1.34 into support. And if we can see that, that for me will open the door for higher prices on XRP and a fuller recovery to possibly $1.62 to $1.77 as our next targets to the upside. If at any point in time we did see a bullish scenario where we saw an aggressive risk-on environment due to some type of major announcement, maybe like a de-escalation of the Iran tensions, we see those things behind us. We see Iran and the United States high-five each other in a magical rainbow world, and all of these uncertainties that are currently lingering in the market de-escalate. The next target to the upside that we need to engulf and overcome is the institutional sell delta at $1.98. If we can engulf these four levels, $1.43, 162 up into 198, then I will get excited on higher prices on XRP. But until we see these four levels engulfed to the upside, I'm being very cautious. To the downside right now on XRP, if we break the institutional buy wall at $1.27, that is going to open the door for a buy squeeze, likely taking out any over-leveraged buyers that exist beneath $1.27, and we're likely going to see sellers gain the upper hand. That would take us down into the next institutional dark pool at around $1.18 before we see an attempt by buyers to defend where they bought from all the way back at the early days of February. If we cannot see $1.18 defended aggressively by buyers and see a price push higher from that level, we're likely going to see the same thing happen beneath $1.27, happen beneath $1.18. We're likely going to see a buy squeeze unfold. We're going to see seller stop losses get hit. That is then going to likely turn into more sell momentum, and that could open the door for a deeper retracement down into 91 cents. I'll halt there for now. I'm sure that we'll have another update before those levels come into fruition, unless we see some super volatile, shocking event unfold. Those are the levels to the downside that I'm personally paying attention to right now. $1.27 as our most immediate support. Beneath that, $1.18, and underneath $1.18, 91 cents. Heading over to Canton. Canton's price action has been relatively boring. I'm not going to lie. We've been stuck in this consolidation range for literally the entire month of February and now heading into March. The top of this range comes in at 17.5 cents. The bottom of this range comes in at roughly around 15 cents, where we're currently operating near now. To the downside first on Canton. Obviously, of course, our institutional dark pool at the 14.801 on MEXC was hit to the absolute pip, and buyers were able to trap sellers and push price back to the upper boundary of this range. So to the downside on Canton, our first bearish target is going to be that 14.801 cent psychological level. If we cannot see buyers push bullish and aggressively through the top of this range, then that's likely going to open the door for these downside targets to come into fruition. This will be the first area of interest where I'm looking to see how buyers react. If buyers cannot defend the 14.801, sellers become aggressive. We break the 14.801, turn it into a resistance, and we see sellers gain the upper hand. That is going to open the door for a deeper retracement down into our next level of the 12.257 cent psychological level. Underneath of 12.257, we still have on our radar the 0.9453 as a possible target. But like I mentioned, we will likely have an update before any of those targets come into fruition. So for now, these three levels are what I'm personally paying attention to, where I will buy a substantial amount of Canton, again, personally, not financial advice, if we were to come down into these lower level boundaries. To the upside, if the top of this range is broken to the upside, meaning bullish scenario number one, we see buyers hold and maintain the 14.801, break above the top of this range at 17.5 cents, turn it into support. That is going to open the door for a revisitation of the 18.194. The 18.194 is the first hurdle that we need to see buyers overcome before we get excited about any higher prices. Next above that, we're likely going to see some friction at around the 19.214, where we're likely to see a passive seller attempt to defend their previous sell positions. If we can see buyers engulf the 19.214, that is going to open the door for our next bullish target at 22.582. And just to wing it, in case we do see any type of bullish recovery in the total crypto ecosystem and market sentiment improves above 22 cents, that could possibly open the door for 26 cents. Those are my downside and upside targets on Canton. Make sure that you guys are paying attention to those in detail. I will be dollar cost averaging in the Canton and XRP if any of these lower level targets are met. Coming over here to wrap up today's video breakdown, we had a huge announcement from PR Newswire. Canton Strategic Holdings Inc. Chairman and CEO Mark Wendland elected to the Canton Foundation board. Mr. Wendland joined 17 existing board members, including senior leaders from the DTCC, Euroclear, HSBC, Digital Asset, Broadridge, and other global financial institutions. So that was pretty interesting to see. We also had an announcement between Fireblocks and Canton, integrating Canton Network for regulated on-chain settlement. This is from Cointelegraph, and it says, crypto infrastructure company Fireblock. So again, another infrastructure-based fundamental showing you guys that the infrastructure, that there's nothing wrong with the infrastructure in crypto. Crypto infrastructure company Fireblocks has added support for the Canton Network, allowing financial institutions to custody and settle assets on a privacy-enabled blockchain designed for regulated markets. According to Tuesday's announcement, the integration enables governed settlement of Canton Coin through Fireblocks' platform and its New York Department of Financial Services chartered trust entity. The offering is aimed at banks, custodians, and asset managers exploring tokenized securities deposits and other regulated instruments that require private settlement and strict controls. So that was also relatively bullish to see. We also had an announcement from Ripple, March 3rd, 2026. Ripple, the leading provider of blockchain-based enterprise solutions across traditional and digital finance, today announced a major expansion of Ripple Payments, its solution for moving money across both TradFi and digital rails. With its new product functionality and accelerating customer adoption, Ripple is cementing its role as the one-step shop for enterprise-ready digital asset solutions. As the world's largest financial institutions race to bring stablecoin payments to market, Ripple stands apart with the only licensed end-to-end platform built to support fiat and digital money movement at a global scale. Backed by a trusted global network, deep regulatory coverage, and new capabilities in managed custody and collections powered by virtual accounts, Ripple enables fintech to confidently operate in the on-chain economy. So that was cool, just seeing some net bullish announcements in regards to the infrastructure for both Canton and Ripple today. Last but not least, this post here in regards to Nasdaq and something that the DTCC said in a recent panel discussion. In 2026, the shift to tokenized collateral is accelerating. If you've made it this far, do us that favor, smash that thumbs up button and subscribe to the platform. To finish this off, it says, with 52% of firms expected to adopt digital representations of traditional assets. And this reminded me of something that a DTCC representative said on stage at a recent event, the CFC Maritz, that was posted 1 day ago, only has 81 views. This panel discussion, I believe, took place at the beginning of February, but listen to what this lady says about the approval that they got from the SEC.
So for those who aren't familiar, DTCC is the Depository Trust and Clearing Corporation. We were founded about 53-ish, I think, years ago, basically to bring infrastructure to the public markets in the United States. We process 4-ish quadrillion in securities a year. I looked up before. Does anyone know how many billions are in a quadrillion? It's like a number so big it doesn't even make sense. I think it's 1 million billions in a quadrillion. So we process 400 billion millions of trillions of things, right? Like, it's insane. I keep saying to our marketing people, like, we should probably not even use that number because it just doesn't even make it sounds fake. But we process that every day for the public markets, right? It's remarkable the size and scale that this operates at. I joined the company about 8 months ago, leading our wealth and investment solutions business. Within that business, we process upwards of 85%, if you include money market funds, of the fund volume in the United States, about 94% if you don't include that. If you're American, what that means is if you have a 401k, every time you put money into that, we're helping to make sure that gets to the right place. So DTCC operates at this massive scale for public markets. And what we do on the private side is that we have a platform today that processes about 13,000 private funds. So it's one of the largest private fund platforms in the world, with over 3,000 entities on the platform. And most people know us for our core clearing and settlement capabilities, not exactly what we do on the wealth and investment solution side. And as you said, Michael, right, some exciting news out of DTCC last month, right before Christmas, is that we received a no action relief from the SEC to tokenize a portion of our inventory. So we hold in inventory on behalf of the US markets about 100 trillion in asset value.
Not quite a quadrillion yet.
Not a quadrillion. There isn't a quadrillion worth of stuff in the world. So that's basically any public security in the United States is held there. The fact that we got this approval means that a portion of that, which includes US Treasuries, the top 1,000 stocks in the United States, the Russell 1,000, and a portion of ETFs, we've been approved to tokenize. So as all of us talk about how do you gain access to those markets, we're really focused on how do we think about enabling that.
I just wanted you all to hear that directly from a DTCC representative, considering what Nasdaq just posted today, March 3rd, 2026. Now, taking you all over here to the document that Nasdaq is referring to, Nasdaq making the case for tokenized collateral. I'm just going to read 3 highlights and I'll let you all go for the day. Scrolling right down here, it goes on to mention $340 million opportunity perhaps explains the urgency with which collateral is being tokenized today. 52% of firms expect to start using tokenized collateral by the end of 2026. That is this year. Over 75% of the world's collateral givers and takers expect to be interacting with tokenized collateral at some point in the next 3 years, making this one of the most prominent change dynamics across today's capital markets. Remember all the way back to the beginning, if you stuck with me here now to the end, as to what the gentleman from FedEx said, this is a once-in-a-lifetime opportunity for our civilization. I firmly believe that, and so many people, because of the lack of price action, are going to miss out on this opportunity, especially if they've been shaken out now at this point. Here it also says, as soon as the world's leading central banks begin to accept tokens as collateral in their backstop fund facilities, then we can expect these evaluations to begin in earnest. So we know central banks, obviously, of course, are going to be major market participants in the digital asset ecosystem moving forward. Last but not least, It goes on to say here, with the 52% of firms preparing to launch in 2026, the industry is approaching a critical mass of adoption. Okay, that is coming directly from a Nasdaq document. You would think people would start to pay attention to vocabulary like this. Again, why I'm presenting it to you guys as my audience. Now is the time to lock in, to do research, to pay attention, to see what the big firms are saying in their documents. They're not scared. They're not fearful. They understand that all of this pullback bullcrap nonsense that we're currently living through is temporary. It says this acceleration is particularly notable in North America, where nearly 80% of firms expect the tokenized collateral to have a major impact on their business model within the next 24 months. With all of that in mind, remember, none of this is financial advice. I'm not telling you guys to go out there and buy HBAR. We talked about today, Canton, XRP. I'm not telling you guys to go out there and invest in any digital assets. But what I am telling you guys to do is go out there, do your research, and understand what is truly happening behind the scenes. There's nothing wrong with the infrastructure and crypto. This was a risk-off backdrop. I hope that you guys enjoyed today's video breakdown. If you did, you're not subscribed, do us that favor, make sure that you're subscribed to the platform. And if you guys don't mind, it does help this channel grow and boost the algorithm, pushing out these videos to more individuals like yourselves. Smash that thumbs up button before you head off. Don't forget that at any moment in time, if you guys want access to our institutional software, I always save the promotion for the end. You guys can access that institutional software directly inside our private CYPRX Discord, the most accurate institutional up-to-date levels on any asset class that you guys want or trade. Commodities, forex, futures, crypto, updated on a daily basis. We hope to see you guys on the inside. With that being said, blessings to you all. I'll see you all in the next video breakdown.